Hi, welcome to Vskills GST tutorials. This first module is based upon taxation and GST basics. Let's start with the definition of tax and taxation. As the above definition states, the word tax is derived from the Latin word taxare or taxo, which means to estimate. Tax is a charge imposed by the state or the functional equivalent on the taxpayer. Tax is not voluntary payment or donation, but an enforced contribution exacted pursuant to legislative authority, and is any contribution imposed by government, whether under the name of toll, tribute, impost, duty, custom, excise, subsidy, aid, supply, or any other name. Taxation refers to the act of laying a tax or of imposing taxes, as on the subjects of a state by government or on the members of a corporation or a company by the proper authority, also a system of raising revenue. The first known system of taxation was in ancient Egypt around 3000 BC, in the first dynasty of the Old Kingdom. The history of income tax in modern India dates back to 1860, when the first Income Tax Act was introduced by James Wilson, who became British India's first finance member. Broadly saying, there are two types of taxes: direct taxes and indirect taxes. Taxes in India are levied by the central government and the state governments. Some minor taxes are also levied by the local authorities, such as municipality or local council. There are primarily two types of taxes: direct and indirect taxes. Let's first discuss indirect taxes. Indirect taxation is policy commonly used to generate tax revenue. Indirect tax is so called as it is paid indirectly by the final consumer of goods and services while paying for purchase of goods or for enjoying services. It is broadly based since it is applied to everyone in society, whether rich or poor. An indirect tax such as sales tax, per unit tax, value added tax, or goods and services tax is a tax collected by an intermediary such as a retail store from the person who bears the ultimate economic burden of the tax, such as the consumer. The intermediary later files a tax return and forwards the tax proceeds to government with the return. Direct tax is one imposed upon an individual as distinct from a tax imposed upon a transaction. Following is the difference between direct and indirect tax. First, direct tax is collected directly by government from the person on whom it is imposed, whereas an indirect tax is a tax collected by an intermediary from the person who bears the ultimate economic burden of the tax. Second, direct tax is imposed upon an individual person, whereas indirect tax imposed upon a transaction. Direct tax is imposed in an unconditional manner, and indirect tax is imposed only if and when a taxable transaction occurs. Some of the examples of direct tax are poll tax or head tax, and some of the examples of indirect tax are VAT or GST. History of GST. Introduction of the value added tax at the central and the state level has been considered to be a major step, an important step forward in the globe of indirect tax reforms in India. If the VAT is a major improvement over the pre-existing central excise duty at the national level and the sales tax system at the state level, then the GST will be indeed an additional important perfection, the next logical step towards widespread indirect tax reform in the country. It is called as value added tax because at every stage tax is being paid on the value addition. Under the GST scheme, a person who was liable to pay tax on his output, whether for provision or service or sales of goods, is entitled to get input tax credit on the tax paid on its inputs. The following slides will show how GST has evolved over the years. You would like to pause the video on the following frames to read through it.